The BRICS New Development Bank has approved another $1 billion loan for South Africa, or around 14.5 billion rand at current exchange rates. It says the funds will support government's efforts to revive the economy, which has been hard hit by the coronavirus pandemic. We're joined now by the BRICS New Development Bank Director General, Monale Ratsoma. Good evening, Mr. Ratsoma, and thank you so much for your time today. Firstly, let's just talk about this money that you have now lent to the South African government. What purposes are you expecting it to be used for?
Good evening to you and good evening to your viewers as well. When we last spoke, and I mean talking to the channel last year, we had approved an emergency $1 billion, which was for health-related emergency. This was with regards to enabling the country to be able to respond with medical equipment, and also in part was also to just top up some of the social grants, what we then termed social support, or at least a social safety net. So we also indicated at the time that we will be considering further support, understanding very well that the pandemic has brought in quite severe economic impact, that if you do not take a view that the country will need to be supported for economic recovery, then it's very likely that if you are issuing loans to the country, there may be down the line some potential struggles with regards to having to repay. So this program is a continuation of what we started off last year. So the second part is going to be very much on targeting programs that are going to enable support for employment and also stimulate demand to a large degree. And you also have to bear in mind that what we're doing as the New Development Bank is also taking from our mandate that we support infrastructure at the main, and infrastructure obviously being the underpin for economic performance long term, but it enables productive capacity of an economy to be expanded. So this is part and parcel. So there are other programs that we have supported in South Africa. Most recently, there was a program that we also supported for the South African government, which pertains to financing and implementation of non-toll roads through SANRA. So it's a much broader support that the NDB provides to South African government.
In terms of the previous loan that you issued to the country, talk to me about some of the audit processes that you as the bank have conducted, if at all, in terms of how that money was spent.
What we do as part of our programming, I mean, as a multilateral development bank, we handhold in the process. So we don't provide loans and walk away. So we will develop a monitoring framework in which then those that borrow money from us will have to report on at a predetermined date. So for the first program, which was on the health emergency, we are yet to come to a point where we're going to then receive a report from the government on how that was spent and the progress thereof. Our expectation is that in October, plus minus, we will get at least the first view of how that report looks like. So I think the main takeaway from your question is that we do, as part of our loan agreements, do make provisions that our borrowers have to report. And this, of course, is a process that we develop jointly with our borrowers, so we can understand what their implementation capacity is, and where there's weaknesses. We also tend to come in to provide any form of technical assistance with a view that then the programs must be successful. So this loan and many others that we do, even beyond governments, where we deal with the private sector or with state-owned entities, the approach is always very, very similar. So we have to be satisfied that when there are matters of procurement, for instance, that there are very basic principles that have to be adhered to. Or processes have to be very transparent, as an example. Then the bidding processes have to be very competitive as one of the principles. So all of those things will be engraved, and it all goes in to ensure that you don't end up with irregularities. And most importantly, because we are a development institution, our main interest here is that these resources must be spent in the interest of the country, and of course in the interest of society that the country would be obviously representing. So the hand-holding comes in the form of ensuring that the outcomes that we're intending for are in actual fact met.
All of the issues that you have pointed out as being issues that you look at in terms of the accountability process are issues which historically South Africa has struggled significantly with, and unfortunately COVID-19 and procurement around that for emergency supplies that you're talking about was no different. We've heard of the multiple reports of corruption in procurement that took place under COVID-19, and in particular for some of the supplies that you could well be talking about. Is the bank concerned about the extent to which the money which it is contributing could well end up as part of these funds that are not being well managed at different spheres of the governance structures in the country?
I would not be honest if I would say that we don't monitor and we don't watch, obviously, with interest and concern. But we're also quite appreciative of the fact that we are not, as an institution, able to control the whole of government. So the one bit that we're only able to do is that for that which that we are working with government on, we put in necessary safeguards such that then we don't end up on our own programs having some of the irregularities that we hear about, obviously, in the public domain. And some of the consequence, of course, in that is that if you've got if the programs are not being spent the way that we have agreed in the loan agreements and all of that, it comes to a point where all the safeguards that we have put in then will have to be triggered. And an extreme consequence is that then you end up having to either suspend the loan in one form or the other. But we would not, of course, be anticipating that. It's just more to illuminate that much of which that you have enlisted as problematic in many other parts of government spend. In the way that we will frame in our approach is to make sure that at least for that which we control, we don't end up seeing spill over from regularities of other programs. So it's very well then that as part of the reporting, then we will be doing that exercise of having to, in fact, confirm that the money that which we have expended to government or lent to government has in fact been spent on the programs that we've agreed jointly with government that the money is going to be spent on.
So at this point, you can't confirm whether that has indeed been the case?
As I say, because this is not a micro exercise that every single day we've got someone who's sitting at an office in government who has to be monitoring how the money is flowing and how every single item is spent. So we will go through the exercise as part of the monitoring framework. We have a unit set up that is purely dedicated to implementation monitoring. So this unit, of course, will look at on a number of projects that we do. We'll get project audits, and those project audits are the ones that will inform us as whether our resources are being spent as per the agreement with the borrowers. So isn't at that time we are able to then sit and cross-check. In fact, there are anything that, or there are things there that are coming up that may be alarming or that may not be in the spirit of the loan agreement. And then if such are found, then there are corrective measures that have to be, there are mitigating measures that have to be put in, which are fully provided for in the loan agreements. All of those are building blocks, in fact, to ensure that then because on the one end from the borrower, there's always one eye that seeks to also make sure that the covenants, so to speak, are adhered to, and that is normal to any loan, in fact, where loans will have in them provisions on governance that the borrowers across the board will be monitoring that nothing should veer off from those covenants, because then they bear consequence to the existence of the loan itself, which may be with having to have to repay early, or maybe that the loan may be suspended, which then compromise the program and outcomes that have been envisaged. All right. Before I let you go, just tell us quickly about some of the conditions in terms of the repayment of these loans. Our programming as a new development bank are quite straightforward. I mean, for governments, and this is not limited to South Africa, on the interest rates, it's quite standard, whether you are in South Africa or you're in China. We would lend on a certain scale, be it in this case about 6-month LIBOR plus minus 100 basis points on a 20, 25 or 30-year loan. So it will vary on those dimensions. I think the main area that you and the public large would have to be interested in is that the decision for government to borrow from a multilateral development bank, which we are known very well for providing the cheapest form of funding around, which can be tested and compared, which can save and saves the government an extraordinary amount of money. Traditionally, institutions like ourselves have not really been appealing for the reasons that when we give you a loan, we are very much interested in your everyday functioning. We are interested in you having to report. We've got an interest in making sure the money is spent properly. So when you see a government or an entity working closer with a multilateral development bank, you should rest assured then that the interest, therefore, is purely about productivity. It's purely about ensuring that there's multiplicity in outcomes.
All right. The Director General of the New Development Bank, Monale Ratsoma.